Want to hear something shocking? You might think you know all there is to know about mortgages, but there's a lot more beneath the surface. More and more folks are signing up for 15-year mortgages. It's becoming a popular choice among new homeowners, and even those looking to refinance their existing loans. They think it's the smart move. The idea of paying off your home in half the time sounds incredibly appealing, doesn't it? But hold on, don't jump on that bandwagon just yet. There are some critical factors you need to consider before making such a significant financial commitment. There's a whole lot to consider before you lock yourself into a shorter mortgage. For instance, have you thought about the higher monthly payments? A 15-year mortgage means you'll be paying significantly more each month compared to a 30-year mortgage. It ain't always the golden ticket to financial freedom. Higher monthly payments can strain your budget, leaving you with less money for other essential expenses or investments. Let's break it down and see if a 15-year mortgage is right for you. Consider your financial goals, your current income, and your future plans. Are you prepared for the financial commitment that comes with higher monthly payments? It's time to ditch the myths and get real about your money. A 15-year mortgage might be the right choice for some, but it's not a one-size-fits-all solution. Take the time to evaluate your financial situation and make an informed decision that aligns with your long-term goals. Remember, the goal is to achieve financial stability and freedom, not to rush into a decision that could potentially strain your finances. So, before you sign on the dotted line, make sure you've considered all your options and understand the implications of a 15-year mortgage. Talk to a financial advisor, do your research, and weigh the pros and cons. A well-informed decision today can lead to a more secure and prosperous future. Don't let the allure of a shorter mortgage term cloud your judgment. In the end, the best mortgage for you is the one that fits your unique financial situation and helps you achieve your long-term goals. So, take your time, do your homework, and make the choice that's right for you. Remember, it's not just about paying off your home quickly. It's about making smart financial decisions that will benefit you in the long run. Stay informed, stay focused, and you'll be on the path to financial success. So the next time you hear about the 15-year mortgage, you'll know the full story. It's not a myth, but it's not a magic bullet either. Make the choice that's best for you and your financial future. And remember, the key to financial freedom is making informed decisions that align with your goals. Good luck and happy home buying. Sure, the idea of being mortgage-free faster is appealing. Imagine the freedom of owning your home outright in just 15 years instead of 30. No more monthly payments, no more interest accruing, and the peace of mind that comes with knowing your home is truly yours. It's a dream many aspire to, and for good reason. Who wouldn't want that weight off their shoulders? The thought of eliminating such a significant financial burden sooner rather than later is undeniably attractive. It means more disposable income for other pursuits, whether that's saving for retirement, investing in other opportunities, or simply enjoying life without the looming shadow of debt. Plus, 15-year mortgages often come with lower interest rates. This is a key selling point for many. Lower interest rates mean that a larger portion of your monthly payment goes towards the principal balance, rather than interest. Over time, this can save you a substantial amount of money. This means you'll pay less interest over the life of the loan. Sounds great, right? The savings can be significant, potentially amounting to tens of thousands of dollars. This can make a huge difference in your overall financial health and future planning. But here's the catch. Those lower interest rates come at a price. The monthly payments on a 15-year mortgage are significantly higher than those on a 30-year mortgage. This is because you're paying off the same amount of money in half the time, and that price might be higher than you're willing to pay. Higher monthly payments can strain your budget, making it harder to cover other expenses or save for emergencies. It's important to consider whether you can comfortably afford these payments without sacrificing your financial stability. Don't let the allure of a shorter term blind you to the potential drawbacks. While the idea of being mortgage-free sooner is tempting, it's crucial to weigh the pros and cons carefully. Consider your current financial situation, your long-term goals, and whether the higher payments fit into your budget. A shorter term can be a great option for some, but it's not the right choice for everyone. Make sure you're making an informed decision that aligns with your overall financial strategy. Here's the kicker with 15-year mortgages. Those monthly payments are going to be a whole lot bigger. When you opt for a shorter mortgage term, you're essentially compressing the repayment period, which means your monthly installments will be significantly higher compared to a 30-year mortgage. This can be a shock to many homeowners who might not have anticipated just how much more they'll need to shell out each month, and I mean a lot bigger. We're talking about hundreds, if not thousands of dollars more every single month. This can put a serious strain on your finances, especially if you're not prepared for it. It's crucial to understand that while you might be saving on interest in the long run, the immediate impact on your monthly budget can be quite substantial. That means less wiggle room in your budget each month. With higher mortgage payments, you might find yourself having to make some tough choices. You could end up cutting back on essential expenses or even sacrificing some of the little luxuries that make life enjoyable. It's a delicate balancing act, and not everyone is prepared for the financial discipline it requires. Less money for things like saving for retirement, investing, or even just enjoying life. When a significant portion of your income is tied up in mortgage payments, it leaves less room for other financial goals. You might have to delay your retirement plans or cut back on your investments, which can have long-term implications for your financial health, or even just enjoying life. Vacations, dining out, and other leisure activities might become less frequent. The financial pressure can take a toll on your overall well-being and happiness. It's important to consider whether the trade-off is worth it for you and your family. Remember, it's a marathon, not a sprint. Financial planning is about finding a sustainable pace that you can maintain over the long term. Just like in a marathon, if you start too fast, you might burn out before you reach the finish line. It's about endurance and making sure you can keep going without exhausting your resources. Don't let those lower interest rates fool you into a tight spot. While the idea of paying less interest over the life of the loan is appealing, it's essential to consider the immediate impact on your finances. Lower interest rates can sometimes lure people into taking on more than they can handle, leading to financial stress and potential difficulties down the road. You've got to find a pace you can maintain for the long haul. It's about creating a financial plan that works for you, one that allows you to meet your obligations without sacrificing your quality of life. Take the time to evaluate your options, consider the pros and cons, and make a decision that aligns with your long-term financial goals. Remember, the journey to financial stability is a long one, and it's important to pace yourself accordingly. Now, I'm not saying 15-year mortgages are all bad. If you can comfortably afford the higher payments, there are definitely some perks. You'll build equity in your home faster and save a bundle on interest payments over time. But here's the thing. Those benefits only matter if they align with your overall financial goals. If those higher payments mean sacrificing other important financial priorities, then a 15-year mortgage might not be the best fit for you. Section 5. Life happens, flexibility matters. Life throws curveballs. You might face unexpected expenses, job changes, or family needs. That's where a 30-year mortgage can provide valuable flexibility. Those lower monthly payments give you more breathing room to handle life's surprises without jeopardizing your financial stability. Remember, it's not just about the mortgage, it's about living your life. Don't let a rigid mortgage term tie your hands when you need flexibility the most. Section 6. Your money, your choices. At the end of the day, the best mortgage term is the one that aligns with your unique financial situation, goals, and risk tolerance. There's no one-size-fits-all answer. Don't let anyone tell you what's best for you. Do your research, crunch the numbers, and make an informed decision that empowers you to achieve your financial dreams. Section 7. Don't be fooled by the hype. Don't fall for the hype surrounding 15-year mortgages. Shorter terms aren't always better. It's all about finding the right fit for your individual circumstances. Remember, it's your money, your future. Choose wisely. Section 8. Find what fits your future. Before you make any decisions, sit down and create a solid budget. Figure out what you can comfortably afford each month. Then, talk to a trusted financial advisor who can help you explore different mortgage options and make the best choice for your future. Remember, your home should be a blessing, not a burden. Take control of your mortgage and build a financial future you can be proud of.